We're back! We are back. 2026, lads. We've already had a amazing GU trade, which I'm gassed to show you boys. Fucking textbook ALG, right? And the one thing I want to go over, other than ALG, is the equilibrium. One of the most important things when it comes to trading. All institutions always use equilibriums. If that's volume, if that's time of day, whatever the fuck it may be, price always wants to come back to the equilibrium, right? And that is how the markets move. And this trade is a prime example of using volume, equilibriums, and also just and knowing that the market is always going to come back to displacements within the market, which is key. Displacements and equilibriums. Those two together are a joke alongside the LG strat. Boys, I'm going to shut up. And we're going to get straight into this GU case study, man. Let's go. Here is the trade, boys. This was a 2.6, quite efficient, fucking anal tingling, just purely because of where price came to. It was about a pip away from stop loss, but quite efficient in the way we got in and got out within 2 hours, which I think from an intraday perspective for a London trade is perfect. Now, this trade was so great, okay, and it wasn't just because the ALG sweep at a high and then a nice distro down to the nice fair value. It was more of where price was at. Now, like what I said at the start of this video, equilibriums are so important. One of the most important things when it comes to structure and also on understanding how the market moves. The market loves to move in one direction, but loves to come back to those internal fair values, or in other words, equilibriums of that range, right? So the most important ways is, the most important, right, which the market always loves to use from an intraday perspective, is the prior day range, okay? This is fucking amazing, right? Boys, trust me, if you don't use the prior day high, prior day low, prior day 50, put it on your chart and see how price reacts to those levels. And also understand, when price is pushed far away from the prior day equilibrium, it's probably going to distro and then come back, as it mostly does all of the fucking time, right? So as you can see here, what I've got marked out here in green is the Asia high, is the prior day high. What I've got marked here in black is the prior day 50. And then what I've got marked down here at the bottom, at the low in red, is the prior day low. So as you can see, at the point of this trade, we took prior day high. So at that point, we know we want to sell the market against this essential leg here to the left. And the reason why we want to do that is because we know this is a distribution. We know that for a fact. This whole leg here, let's get rid of these circles and let's use a better tool. This leg here is our distro, okay? It's a bit better. This low to this high, right? That is essentially what our distribution is. But we know a distro doesn't always continue up because price needs to come down, rebalance, fill internals, so more buy orders can get put into the market, because the market can't just keep buying and buying and buying. Price needs to take profit at some point. And once they do take profit, they don't want to buy again at the same price. They want to allow price to come lower in order for price to move. This is a very standard thing that happens in the institutional trading world, and that is something that you need to understand and follow, because us as people with essentially zero, fuck all money in this market, we need to move in the footsteps of the institutions, and that is so key. So using equilibriums is fucking perfect. In most scenarios it works out, right? Literally most. And boys, feel free to use this against most pairs. What is going on with my hair right now? Why have I got one curl at the front like Superman, bro? What the fuck? Anyways, so as we know, we're above the prior day high, which is a perfect time for us to sell on the 5 minutes to the 15 minute, okay? Which was bloody perfect for us. As well as obviously Asia opened and European session opened at the point where we actually are now at the highest point of the prior day range, where we knew we wanted to come down, okay? Second point, it wasn't just the prior day range we took the high of. It was the prior week high. We also had the prior week 50 here with the prior week low here. So we know we don't have anyone wanting to buy the market here. Why? Because the equilibrium tells us we do not want, the institutions will not be buying at prior week highs or prior day lows. These are levels they'll be taking profits. From an intraday perspective, this is where they're taking the profits. The same way if I was looking to long off the Friday 50, I would look for the Friday high as a target, as the institutions would as well. Obviously, I'm not saying that's the trade they're going to get in on, but if they're looking to get out, they're not going to get out. They're going to get out at a premium level, and they're going to get back in at a discounted level. I can't stress that enough, boys. They will get out at premium levels or discount if they sold, and then get back into the market once price has, well, if they're looking to buy, if they sold at the premium, they want price to come back down to the discount. The same way, the way to make money in this world is sell in the premium, buy in the discount. And that is how you make the most amount of profits. And that is how institutions have been trading for years to make their fucking money. Equilibriums are one of the most important things you will ever come across in trading, because it is such a universally used point of equilibrium, okay? It doesn't matter if you trade supply and demand, you still use it. You trade fucking support and resistance, you should still use it. You scalp, use it. You swing, use it. Fucking use it. Any scenario, you use it. Because institutions look at equilibriums all of the time. I can assure you that. Feel free to do some research if you need. But this is why I use levels like the prior day 50, the prior week 50. It's for this exact reason, right? It's for this exact reason. Now, let's go back to the trade. So, as we know, we took the Friday Jesus. We took the Friday high, and now we've also taken the prior week high. So, at this point here, we really want to start looking for those positions to the downside. We've got three big tellers. We took Asia's high, we took prior week high, we put prior day high. Sells are beautiful here. Obviously, I'm not looking to aim for too much. Okay, the reason why is because, let's put it in perspective for you, right? If we take prior day high, like I said, high chance that the market is going to come for the prior day 50%. But the whole point is, if you think price is going to come here, you don't target there. You target higher. I promise you, backtest and do that data. I'll promise you, your data is better when you go for targets that you don't think price is going to go to. If you think price is going to go to the prior day 50, aim for recent lows, Asia's low, right? Promise you that. Don't, again, a lot of people think that you need to be aiming for the biggest amount. Your RR needs to be high. And that, boys, is fucking false. Don't listen to what most people say on the internet, or what most people say in stupid prop firm discords. Most people don't have a clue. It doesn't matter. It doesn't matter. Honestly, you will see so much better results. Your psychology will be so much stronger if you just aim for targets that are reasonable for your trade. If I'm taking Asia's high, I'm just looking for Asia's low to be taken. That makes sense. But just because we took prior day high, I'm not going to sit here thinking, oh, fuck me. Hold on. We could take prior day low. Woo! Fuck me. Why am I going for a 1 to 2 when I can fucking... Well, I can go for a 14R. Yeah. But then also, it's a lot of people say, yeah, but it's fine because you can lose more trades before you win. But boys, how many of us trade on prop firms? I bet 98% of you man watching trade prop firms. I trade prop firms. You're not a dickhead for trading prop firms. In fact, you're smart. You're utilising leverage, which back in the day you didn't have. Nowadays we do. You're utilising what we now have, which is fucking smart. Great. But do realise, your strategy, what really matters with a strategy is whether you are... how many losses do you take before you win? If you lose 10 trades before you get that 11R, yes, you're profitable, but you're going to lose your funded account. What matters most, especially if you trade prop firms, you have to cater to a prop firm account. So stop going for big RR trades. Yes, I know, I understand how win rate and RR works. I know that obviously if you lose 10 trades in a row but hit 14R on average, it works, you're profitable. But you cannot trade on a prop firm account. I can't stress that enough. A lot of people need to start realising we're on prop firm accounts, so fucking trade like you're on a prop firm account, right? If you're on a personal, different story. I see it. I see your vision. I still wouldn't be going for these big trades because, honestly, you're going to lose 12 trades in a row and think, fuck me, is life even worth living at this point? I bet your psychology will deteriorate awfully. Just for notes, how did we do? Did we come down to prior day low? Did we come to prior day 50? I think we came to prior day 50. Let's actually see if you would let's just see for argument's sake. Let's get on a bigger fucking time frame. Yeah, so we took Friday 50. Did we take Friday low? Looks like we're fucking coming for it. Looks like we're coming for it. Boom, we actually did take it. Fair play. Fair fucking play. Not the principle, right? Not the principle. I really hope for the sake of this, that didn't hit 49. Shit. But you get the principle, right? Again, this is an anomaly. Will probably happen 1 time out of 20. Friday 50 makes more sense, but even still, boys, there's no need to be going for that. I promise you. I'll be so honest. If I didn't take profits here and I took profits at prior day low, prior week low, that's not even prior day low. That's prior week low. Oh no, I had it on the prior week, prior day. Where was it? It was about there. But the principle is that if you have a good trade like that, you might have about 10 winners where you lose your prop firm account. And again, if you half risk, then you're only taking 7% from a trade like that, which I would be fuming at, to be brutally honest. But yeah, it's equilibriums that I want. In this video, I wanted to stress equilibriums so much. And boys, we just dropped a new indicator with all of the settings you need. The range, the sessions, the fucking DTO levels, the prior day levels, prior week levels, with all your equilibriums. Everything. We've also got a CRT one, which is going to help you use candle range theory to your best of your advantage. But boys, if you want that, it's over in the Discord. But feel free to drop a message on the YouTube, or I'll put it in the description down below, boys. I'll put it in down below. That felt homosexual to say, low key. Don't think I was allowed to say that either. But we move. But yeah, at the end of the day, beautiful trade. But the reason why this trade was so good is because we had equilibriums on our side. Not only the prior day, but also the prior week. Okay, and I can't stress how good that works with the ALG strategy, the Asia liquidity grab, something we've been training for a very fucking long time. Added variables to make it perfect to trade during London session from 7 AM to 10 AM, the kill zone, the most amount of volume right there. And also, I want to go over volume as well quickly. Like I said, few reasons for this good trade was the volume and the equilibrium. Very fucking perfect. Now let's drop down to volume, okay? And I want to show you the SVP, which I've been using recently, which is fucking golden, okay? So what the SVP shows is it shows essentially the high volume times within a trading day, okay? So if I replay price back to our trade, perfect. So you get your volume for the day. Obviously, here we still have volume building up because this is today. As if I was trading the day, this is today. So forget about this. We're looking at the prior day range. The prior day range is telling us what price has done in terms of volume. It's expanded away from the high volume area. Okay. So just so you guys know how this works, is the yellow area, the yellow zone. So where these two lines meet. I say meet, they don't meet, but where these two lines are is the high volume within that day's price action, right? And that orange point is where volume was at its most highest. So essentially, what the rule is behind this, and Lou has done many videos on this recently on the YouTube, boys, so feel free to go back and watch some of Mr. Burns' videos. But boys, what we got here, right, is we have high volume price trade away from high volume, where we're looking for price to now retrace back down. The same way as we'd use an equilibrium with price, here we're using it with volume. Partnering up volume with price, volume price with time. You're getting a profitable strategy, boys and girls. I swear to God. But that's essentially what made us get into the trade. So the volume, the dispersion away from the higher volume, trading back to the dispersion away from, or essentially the grab of the prior day back to the equilibrium of the prior day range, and also Asian liquidity higher. All of these points melt up so well. Volume, equilibrium, ALG, bullet fucking proof, boys. I promise you that. I appreciate you boys for watching. And again, description below for the indicator. We've got 2 indicators that just dropped from Vishal. Shout out V Gokman. We've got a sessions and equilibriums. We've got a CRT one. And to be honest, boys, we'll probably have loads more community indicators out there. So feel free to ask us if you want anything made. We can get those made and we can get anything done for you. Boys, I'll catch you, man, on the next one. I love you all. I hope you like this one. Okay, and please remember, equilibriums, volume, ALG, London session. It's fucking bulletproof. I'll see you boys on the next one, man.